I'm Tom Moul, Director of Strategic Tax Advisory at Stanbaugh Ness, and it's our goal in these videos to bring to you some often underutilized and sometimes misunderstood tax planning strategies that can help you significantly reduce your tax bill. Today we're going to concentrate on two strategies that both revolve around ownership of a business building. So if you're the owner of your own property, these strategies may be something you're not aware of, but that could help you significantly.
Cost segregation is a process of dissecting the components of a building to identify those that qualify for a shorter useful life for depreciation purposes than the typical 39 years. The benefit of that is that by converting some of those costs to shorter useful lives, we accelerate the tax deductions for depreciation, putting the cash that you would pay in taxes had you used the traditional 39-year life into your pocket today so that you can use that money to invest in other aspects of your business. It all starts with having an engineering-based study performed to break down those costs, identify those that qualify for shorter useful lives, things like, for example, parking lots, driveways, and sidewalks that qualify for a 15 or 20-year life, as well as components in the inside of the building, removable carpet, all sorts of different items. The benefit is that we look at the present value of the accelerated tax deductions to see if it's more than enough to cover the cost of the study. And traditionally, we're looking at a return of between 6 and 12 to 1 on the cost versus the benefits. So it's very powerful. And it doesn't have to be a building you bought this year. You can go back to buildings bought as long ago as 1987 by filing a change of accounting method, claim those additional depreciation deductions all in the current year tax filing, putting that money in your pocket today that you could have realized in prior years. The benefit of a 179 capital D, not to be confused with the election to expense fixed assets, which is 179 small d, is that the building owner can receive a current depreciation deduction of up to $1.80 per square foot for buildings that are built or renovated to meet certain energy efficiency requirements. What's really exciting, though, from my perspective, is that design firms that work with government owners, government building owners, can qualify for that deduction on their on their corporate returns or business returns, even though they don't own the building. Since government building owners do not pay taxes, Congress wanted to incent the design firms to encourage those building owners to build buildings that were energy efficient. So those same deductions can pass through to the design firm, even though they don't own the building. It can be very powerful. We have clients that have accrued millions of dollars in tax deductions as a result of that design work. This has a significant impact on their taxes. The benefit is broken into three pieces. It's a 60-cent per square foot deduction for the building envelope meeting the requirements, 60-cent benefit for the HVAC system meeting the requirements, and a 60-cent benefit for the lighting systems meeting the requirements. The building has to be designed and constructed or renovated to meet those requirements, and you get that deduction in the year in which the building is placed in service. It's a cash flow type of benefit. By getting the deductions currently, you're reducing the taxes that you pay currently. Therefore, you have that money to invest elsewhere. And again, we look at that in terms of a present value analysis to determine whether or not the cost benefits there of having this study completed.
Well, thank you, Scott. That was some very valuable information. Both of these concepts are really all about increasing cash flow, and as we like to say, cash is king. So if you are a building owner and are interested in hearing more about how you can increase the cash flow in your company, We are happy to share some additional information with you. We do have a digital brochure that tells you more about both the cost segregation study and the Section 179 capital D deduction. If you would like to hear from us personally, to reach out and contact either Scott or myself, and we'd be happy to get back in touch with you and speak in a little bit more detail. So thank you for joining us today.